view, Fed funds may go down further, but it's the inflation market that needs to adjust much lower in that deflation or recession type scenario.
This may be a tough question, but does it matter that with the Fed easing, does that sort of disrupt the inflation outcomes, if you will? There's been a lot of talk that as they start cutting, maybe this then restokes inflation, or at least restokes consumer spending in a way that actually stokes inflation. Have you sort of modeled that out?
We have, and inflation is relatively low across price on the markets across the entire curve. So whether we look at the 1 year, 2 year, 3 year, once we strip out the first 6 months, which is mostly about oil, the market's priced for a little bit above 2% inflation, which might be fine for the 1 year or 2 year, but that's also true for the 10 year and 30 year. So we think that there should be a much higher inflation risk premium in the curve. In other words, the market is pricing in free inflation insurance. You should buy some when it's free. So we think the longer inflation expectations offer or longer break-evens offer good value here. And that's why we saw good demand at today's 10-year TIPS auction.
Yeah.
The $17 billion was taken down quite easily.
So when you saw, first of all, I love inflation. I love insurance. I'm a huge insurance person. I'm like, let me just sit and put stuff in the same place and not look at it. So, but to that point, if inflation stays a little bit sticky, and we saw the Fed revise their neutral rate up a bit, do we think the neutral rate has to be a little bit higher? And then what does that look like?
Well, what the Fed revised to higher, which the market sort of already has, is the neutral real rate. So in other words, their inflation expectation in the S&P didn't go up at all. 2%, 2%, 2%. That's their mantra, and we don't expect that to change. But what has been creeping up is the neutral nominal rate. But if the inflation rate's not going up, that means it's the neutral real rate that is going up.
Hey.
That's about productivity, about labor force growth.
I'm back.
So those things have been stronger. We've been getting stronger labor force growth, and we've been getting potentially stronger productivity growth, expectations of productivity, in part because of AI and technology that may be boosting productivity longer term.
Great stuff, Michael. Actually, just before you guys, your house call was for 25 basis points at this most recent meeting. We got 50. With your rate cut expectations going forward, you expect them to stay at a 25 basis point?
That's right. We essentially think they pulled forward some cuts that would have happened next year.
Yeah.
So we expect 2 more 25s this year.
Yeah.
We think they could go 50, but the data really has to weaken much more than they expect for them to do that.
All right, great stuff. Michael Bond, head of global inflation market strategy at Barclays, kicking us off to the close on this Thursday afternoon. When we come back, a trip out to San Francisco and a conversation with the CEO of Salesforce, Mark Benioff, sitting down for us live from the Dreamforce conference.
All right, plus the market eating up shares of Darden and asking for seconds. The Olive Garden owner announcing better sales and new Uber. Cool partnership for everyone. That top
Have you been to an Olive Garden before?
No, I've been to an Olive Garden probably in 2002.
All right. Well, I know you've used FedEx, and as everyone has, and we're going to get results out of that big company after the bell tonight. A lot of people looking at some of their idiosyncratic issues. Others really want to peek into the holiday shopping.
I have this
season. Stick with us. This is the close on Bloomberg.
Palantir calls that are making me sweat. Oh no.
Precision, skill, speed. Split-second decisions are the moment of truth for a trade or a race. Lightning fast execution, relentless dedication, and a pursuit
Let's see if
excellence.
they.
Whether
I
on
don't
a
know.
trading
I
floor
have my
or
serious doubts.
Together, we don't just compete. We succeed. As expert, trade like a pro.
AI, how it has penetrated pretty much all sectors, including music. AI can write music, compose music. How do you see AI changing the landscape?
No, AI definitely helps what I did with jewelry. I use the AI and helping me to give some idea, but ultimately you still have to do a lot with it, to just give you very superficial ideas and, but at the end, you still have to customize and have to really make it and do that. I do not think that AI and the technology can replace it.
Are you content one day we would be able to differentiate designs by AI and designs by an actual designer?
I don't know. For me, I still got to know what they decided doing is the spirit, is the heart that the computer can have.
What could you do if your data was working for you and not against you? With Bloomberg delivering enterprise data directly to your systems, you get easy access.
Well, we are close to the close. We're close to the close. 4 p.m. We only have 1 hour.
So you can show the world your
Okay,
man.
Palantir is not doing good for me.
Bloomberg.com/enterprise data to learn more.
It's a
Going the other way.
multi-trillion-dollar industry. We'll show you
Should
what's
have
happening
kept
in
my
ETFs
books.
like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week.
The main issue I have when I close
From business,
a
markets,
trade,
economics, tech, and climate.
look, it's breaking down. Damn it.
We'll look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
The Buffalo Wells is emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
Nasdaq is not finding support either.
Wall Street Week.
More than what you need to know, it's what you need to think about.
Global stocks rallying. S&P looking at its 39th record close for 2024 alone. So what do you do in this kind of environment? We're going to ask Callie Cox, Chief Market Strategist over at Holtz Wealth Management. Callie, do you buy
I
this
doubt
record
this is a
rally
good
right now?
idea, man.
To buy as long as the economy stays okay. And notice I didn't say solid, I
The,
said.
now the long trade is eating my games.
Unemployment, of course, is climbing higher, but we're seeing a lot of that as a result of the labor force expanding. And look, I think that there are risks on both sides right now, but the risk of sitting this out seems to be higher than the risk of potentially buying at the top.
So it's not just the S&P that's at a record, it's really mid caps that are at a record as well. The Russell's also having a nice run, but not at a record high. Where do you have to be within this record rally?
Well, I actually think the fact that the Russell 2000 hasn't seen a record since 2021 is a positive thing. I think that there's
No,
room to
it seems
run
they are
there.
buying the
So you're
dip.
right. Mid caps and small caps are catching up because markets have anticipated rate cuts, not just that 50 basis point rate cut, but more rate cuts after this for a while now. Look, higher rates have been holding back small and mid cap stocks. So small caps are actually one of the areas of the market that we see the most value in. And we think if the economy stays okay and rate cuts can, reinvigorate growth a little bit more, then small caps could be the area to watch.
Well, but sort of underpinning that idea though, Callie,
Damn
is the
it.
idea that we're actually gonna see some better earnings out of these companies. This really wasn't a revenue story. This was about balance sheet issues, and of course, I think what a lot of people saw is that bottom line, not keeping
Palantir is-
big cap stocks
It's
here.
making me
In order for that
mad.
thesis to come true, you also have to believe that the economy is holding up, right?
Yeah, you absolutely do. And the reason why small caps are more, I'd say attractive in this environment, but also more sensitive to rates coming down and the economy staying solid is because a lot of small companies are more domestic focused. They don't have that international revenue source like some of the bigger, let's say big tech stocks, for example, have. So, these small companies have been crushed. There have been recession worries. They're more reliant on debt. But revenue expectations have been coming up. And, these companies have learned to gain outcomes. And now that they're getting some relief from rates, we could see them, potentially stretch out and, look into new expansions and potentially generate more business on their side of the equation.
Are there certain sectors, Callie, that you're looking at that maybe could provide potentially?
Definitely, I was too early closing the puts.
But we
You should
like
have
the
waited for a
unlovable
breakout.
areas of the market, or the unloved areas of the market. So
Now
I already
I'm
talked about
basing
small caps,
a
that's an area I'm
co-position in
watching
something
closely.
less likely.
We also think it's worth taking a look at rate sensitive sectors. Value stocks.
I'm very
stocks that are
afraid.
trading close to the
I don't want to
earnings
lose
they're
money on this,
generating.
and I don't know when to close
More of this rotation that
the
we've
call
seen
either,
since
but I
the
don't
middle
know
of
what the
July.
stop
Now
loss
that
would be
inflation is
logical.
controlled,
I don't know if I
we're
already
seeing
broken a
that
stop
else.
loss.
What do you
If I
then do with
went
financials? They're getting a boost today as well. How does that play into an economy like you said that's okay and rates coming down?
Well, financials are interesting, right? They benefit from a bit of an uninversion of the yield curve, of course, because their net interest income comes from, making those loans.
It looks like I'm
Also,
accepting
being able to
huge
manage the cost
losses.
on the deposit side. I think if the economy stays okay and if rates keep coming down in the best kind of way, a celebratory way, then I think financials could stay attractive here. But you have to watch them. They are economic.
Just looks
obviously
like
economically
it's
sensitive. They're one of the more
retreating,
economically
not
sensitive
like
sectors out there. So if we see some trouble in the job market, you could see that manifest itself in banks first.
All right, Kelly Cox, Chief Market Strategist over at Ritholtz Wealth Management. A closer look here at the big moves that we're seeing in the small and mid-cap space here. Interesting though, if this is tied to economic conditions, we're getting another maybe potential read into the global economy. This out of
I think my
Mercedes-Benz,
misleading.
which is actually cutting its full year forecast for cars. It's basically seeing about 7.5 to 8.5% growth. Its previous forecast was 10 to 11%. It's blaming a deterioration of the macroeconomic environment, and of course also cites China as being a big culprit of that. And obviously, Alex, this is more of a global story of what we're hearing out of Mercedes, obviously based in Europe and obviously does a lot of business in Asia, whether that has reverberations here in the US for that sake.
Well, and it's interesting too, because their sales mix is expected to remain unchanged. This isn't like an electrification thing.
Yeah.
This seems to very much be a specific China macro environment thing. And that's the problem when you're looking, say, for value in Europe, right? So many of those sectors and so many of those companies have big exposure to China in a way that companies here don't. How do you deal with that as an investor?
Yeah, absolutely interesting. That return on sales, 7.5 to 8.5% out of Mercedes-Benz, a cut from their previous forecast of 10 to 11%. When we come back after the break, we're going to take a closer look at the health of the restaurant industry. Darden Restaurants delivering a better than expected quarterly report and a clutch partnership with Uber. We're going to digest those results next in Top Calls. This is The Close on Bloomberg.
Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto. The people.
This is a political attack, and we must hold our elected officials accountable.
Transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow.
Apparently it's doing terrible.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
Is the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Preeti Gupta. And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
What could you do if your data was working for you and not against you? With Bloomberg delivering enterprise data directly to your systems, you get easy access to the details you want, optimized for higher level analysis, and financial data experts committed to helping you maximize your every move. Our data is made for more, so you can show the world what you're made of. Visit Bloomberg.com/enterprise data to learn more. Ever wish you had more hours in the day? It's time to digitally transform how you work. Bloomberg has been building and implementing AI solutions for more than a decade. Now we're putting tools enriched with AI and NLP output at your fingertips. New APIs connect IB, the terminal, and your firm's proprietary systems. Automate workflows, drive efficiencies, and reduce context switching. Discover how you can transform your desktop today.
All right, let's get a view from the sell side with our top calls. The big movers on the back of analyst recommendations, and we start off today with Elanco, the maker of pharmaceuticals for pets and livestock, a downgrade today to equal weight at Morgan Stanley. The analyst there saying the animal healthcare company lacks conviction in its near to medium term strategy, and she says that the pet care landscape is growing a lot more competitive, making it difficult for it to differentiate its key product shares, though getting the bid on the day up 2%. Moving the other direction is Casey's General Stores. JP Morgan cutting the convenience store chain to underweight, under the guise that its valuation is stretched due to recent outperformance. He also expects convenience stores overall to face challenges with potential weakness in discretionary purchases. Casey shares down 2%, down for a fifth straight day. And finally, let's take a look at DoorDash, an upgrade to buy from neutral at BTIG. The analyst says the food delivery service is hitting important milestones with positive earnings and net income expected in the second half of this year. He also says investors are underappreciating DoorDash's long-term growth driver. So shares up about 5%, and those are some of our top calls. We do want to stay in the food space, and specifically the food delivery space, because Darden having its best day going back, well, to at least the last few years. The restaurant owner of dining brands like Olive Garden, Yard House, Cheddar Scratch Kitchen, none of which Alex has ever been to. But now, get this. Alex can just order it from Uber. Darden out with his first quarter results this morning to show a promising recovery, and Darden also teaming up with Uber to deliver food from Olive Garden starting this year. Nick Setjon joining us right now, Managing Director and Equity Research Analyst covering restaurants over at Wedbush. He currently has an outperform rating on Darden shares. Darden having a really good day here. I was just looking at the superlative here. Best day going back to 2021. Nick, let's start with this Uber partnership, because this is a big deal. Darden had really resisted. We've spoken with the CEO before. They had really resisted going the third-party delivery route. What pushed them into the arms of Uber?
I think it's market share shifts, and I think they realize that, some of these other competitors, peers like a Brinker, with Chili's is doing, better. Part of the reason is, it's being helped by names like Uber, Brent, DoorDash. And so I think that's where the consumer's going. I think that's where the peers have been in a while. I think they realize that in order to maintain their share, they need to be there too.
What's the economics of that look like? I mean, when we talk about these partnerships with Uber and some of the other delivery companies, it always seems that those delivery companies take a big chunk, a significant chunk, I should say, of that revenue. How is this structured in a way where it's profitable to Olive Garden?
No, I think it was minor, and apparently it was third.
That's why they actually tried to
O sea, I don't
going
trust
in that
this.
direction. But you tend to price a little bit higher on the third-party delivery
It's
channels,
confusing to me.
in such a way where the dollars stay relatively the same, but the margins are slightly lower. So clearly,
It's
the middle
negative
man takes so much.
$55. If I
But does
would
this
have
mean that Nick, that
gone
maybe
the
they will
other way,
avoid any
no,
sort of deep
waited
discounting
a
price
little
war
bit
here?
more, I entered too early
It's
to
going
the
to be
trade
difficult to
otherwise.
avoid deep discounting price war. They tried very hard. I mean, pre-COVID, their marketing spend as a percentage of sales was 4%. They went all the way down to 1%. It's now back up to the mid ones. Probably going to continue to pick up. And one of the
That's
reasons
one
why
thing.
the stock is up, in fact, the main reason why the stock
That's
is up,
very bad
because they
for
went from
shorts.
negative comps in July to
But
flat
we need
comps
to
in
see.
August and positive comps in September, and those positive comps are being driven by very
Let me see
specific
one
price
thing.
point promotions, bringing
Hey,
in
Redfin.
pasta, a week earlier, and going forward, they're going to
Oh
have
my god,
several
Redfin.
price point
13 con
promotions,
29,
because that's
13
what
with
Brinker's
29
doing, that's
cents.
what Applebee's is doing. They don't really have a choice if they want to maintain their market share.
That's what I don't get. So is the
I
all you
liked
eat
it
pasta,
for a
you
while.
have all those kind of gimmicks that bring people.
You don't know
to
the
order,
future,
you
but
can't
you
get
need
that
to
if you
take
order
care
through
of
Uber.
what you
Like, I don't,
just say.
like, why wouldn't someone just like order a regular pasta joint? How does that actually help them?
I think they're focused more on the new customer and some segments that they don't reach, right? I mean, so there actually has been a lot of data on the fact that these third-party delivery, apps, they actually do reach a segment of the customer that doesn't necessarily overlap with, any given restaurant's regular customers. I think one of the reasons why
It needs
they
a
are doing
lot,
this is
lots
the right
of
to try to
helps
reach a newer customer segment.
to get back up.
Well, I want to talk a little bit more about the actual in-store diners and the traditional business, because we know that had been hurting. We saw a little bit of a rebound, kind of a return, if you will.
Let's see a
back to,
film.
growth rates, at least for right now, that I think the market can get comfortable with. How much is
Wow,
that
a
continuing,
film
independent of whatever the deal is with Uber?
losing ground.
Because
This
how do
was
they get
after
there
the
beyond
CEO
just
talk.
offering promotions?
I will write that down.
Well, I mean, I think we have to put it in context, right? I mean, again, like I said, they were very promotional pre-COVID. Everybody was during COVID. And I think that, the customers just felt better, so they were looking for promotions as much.
Back to
But we're now
44
in an
with
environment
93
where,
cents
customers are normalizing
after
their habits, are
CEO's
normalizing back to what we
talk.
were used to, for
in
decades
Bloomberg.
pre-COVID. And so I do think they're going to have to, increase that marketing spend a little bit more. And so go back to some of the things that they used to do in a more normal environment. And that's being driven by the competition, right?
We need a lot more.
Ultimately, that's what Chili's is doing. That's why Chili's comps are, double.
I'm actually, I'm not, I don't know what I'm expecting on.
Doing in response, they're going to have to spend more on marketing and promotions, period.
All right, Nick, we appreciate it. Thank you so much, Nick Setien, over at Wedbush. We appreciate that. Which brings me to
I'm expecting a pump
Is there like, but that's my point. Is there a
Tomorrow
direct translation?
open.
Like, oh, good, the Fed cut, I can go eat more. Like that's where the real
Tomorrow
economy
open.
is, right? Like these kind of companies.
Yeah, I mean, that's the kind of the holy grail. Ideally, that would be the case, but how long does that sort of?
That's what, yes,
land?
exactly.
Expecting a pump in tomorrow open.
And is that even going to really show up? And where does that show up? It shows up on the credit card statement or so?
In tomorrow open.
Exactly.
I'm
So
expecting
it's
a pump.
gonna move the needle for
Did I
some
say
of the,
right?
Consumer discretionary.
But with high chances
That's not.
of
I'll get along. I don't really go
taking
along. I've done capital
profit.
growth. No. You're just reading it off the press release. Have you?
Sell off.
He has not. I'm saying no. I mean, you know, capital
Yeah,
growth,
pretty
capital,
much.
the divide the exchange. Anyway, all right, coming up, the man who got the call right from the Fed, Mike Feroli over at JP Morgan. This is Bloomberg.
Oh, it's calling.
From the beating heart
Ah.
of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the
Hey,
future
hey,
is?
for
Inflation
Pananti right
is
now.
normal? Are markets too optimistic?
Damn it.
Have you worried about
Ah,
outside your
faking
control?
fake
And does
hopes.
the current fighting completely stop? I'm Francie Blackwan,
Of a
and
bounce.
this is The Pulse. Every
Stop.
weekday at 9
Damn
a.m.
it.
only on Bloomberg.
The top names at Jackson Hole are on Bloomberg.
Inflation's kept coming down, so in the real rate sense, we've been tightening. I think that this reflects the reality of the economy. That we've got to keep our eye on the employment side of the mandate now. This is what the path down to
I think I'm not fighting in the right side.
Nobody covers Jackson Hole like Bloomberg. Context changes everything.
My fight is putting
It's the
up
world's
by the
second
shorts,
largest economy with a
by
growing
the profit
influence in global
takers.
affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Okay.
Surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials
the
accountable.
transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow. And these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
It could happen though. And in my opinion, it's going to be 37 once again.
We'll debate the most important stories and what will drive the big investment decisions
I
throughout
didn't
the
like the
morning.
37 at all.
I'm Kriti Gupta. And I'm Anna Edwards. Join us every weekday morning for the Opening
It's a good
Trade,
point.
live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Maybe didn't like the 37 at all.
What could you do if your data was working for you and not against you? With Bloomberg delivering enterprise data directly to your systems, you get easy access to the details you want, optimized for higher level access, and financial data experts committed to helping you maximize your every move. Our data is made for more, so you can show the world what you're made of. Visit Bloomberg.com/enterprise data.
I'm not sure at all.
Ever wish you had more hours in the day? It's time to digitally transform how you work. Bloomberg has been building and implementing AI solutions for more than a decade. Now we're putting tools enriched with AI and NLP output at your fingertips. New APIs connect IB, the terminal, and your firm's proprietary systems. Automate workflows, drive efficiencies, and reduce context switching. Discover how you
Yeah,
can
it looked like
transform
more
your
a fight
desktop
like to the upside now in Palantir. Oh, but there
Here's
is no.
the headline. Fed cuts interest rates by 50 basis points and the bond market returns are going to be negative today.
This was a huge victory for Jay Powell, who really laid out at his Jackson Hole speech that he was worried about employment. And that is what this is about.
Maybe we want to catch something that will happen, you know?
50 basis points cut. And the first reaction was actually steepening of both 2-10s and 2-30s.
My
Which
real
tells
doubt.
you something about what people are worried about.
All right, those were some of the guests that we had on Bloomberg Television reacting to the Federal Reserve's half percentage point cut yesterday. Romaine Bostic here alongside Alex Steele, still parsing the market moves on the back of that.
Yep, now it's a different story. My question though for the market, is it really about the Fed cut yesterday, or is it really about options expiration tomorrow, and now you need to kind of rejigger what your delta is going into that?
Yeah, and it's also about economic conditions, and I think that a lot of people were so focused on the actual cut yesterday, but they also seem to kind of look ahead to next year, and they look what was in the SEP, look at what was on that dotted line, and I think that emboldened a lot of people. Scared, I think, some people at first yesterday, but I think you saw the bids coming today into those small cap cyclical names, economically sensitive names. At least for today, that seems to be the truth.
Yep, you can see by the back end too, selling off. So one of the two banks that got the Fed call right yesterday, sticking to their 50 basis point cut call after the August jobs report, and the man behind one of those calls is here in studio with us, Michael Feroli, JP Morgan chief U.S. economist. August report comes out, you're the first to say, okay, they're going 50 in September. All the other banks were like, no, 25. Citi was the exception. You stuck to your 50 and you were right. What do you think they're going to do next month? Or November?
Changed on July.
In August of July. Yeah.
Damn
So,
it.
right now we're looking
This is
for
making
another
me
50
lose money.
That's very contingent on what we get in the next two jobs reports.
What the hell I'm doing though?
Given the deterioration we've been seeing in overall labor market conditions, if that trend continues, I think they would be compelled to get closer to neutral yet again in a speedy fashion. However, if we stabilize here, I think
Go further down.
without a deterioration, I think we tough for Powell to pull the committee into another larger cut like he did.
What would deterioration look like? Like what it
Not
feels like it's zero
good,
tolerance
not
for
good.
any rise in the unemployment rate. So what does deterioration look like for that 50
So
basis?
I do think a rise in unemployment rate will be something that I think if we were to see another 2/10 move up.
Fucking hoping for a
over those
miracle
next
and
two
this
reports,
won't
I think
happen.
that's an interesting meeting. I think if we start to see private payrolls break below 100K like they or further below 100K like they have been doing, I think that would also be something that the committee would have to reassess their plans that were in yesterday's SEP.
How much do you trust in that data? There's been a lot of talk about how
We won't have this kind of
there's
miracle.
distortions there because of immigration.
And it's an important stop, but
Kind of give a sheer general
profit
sense here.
taking trend
So
is
there are always distortions. They're
tough.
probably larger than normal
Yeah,
now,
hell.
in part because of the large immigration numbers that we're seeing. I
I'm
think
always
that probably is less of a problem.
I don't like
for,
anyways.
the ratios in household survey, like the unemployment rate, like participation rate. I do think there are some broader concerns, which Chair Powell mentioned yesterday, about the non-farm payroll number, which not only has been getting revised on a monthly basis, but we have that big
Plain
annual
strength,
provisions.
plain strength.
So that does raise a question. We're always kind of looking in the rear, in a foggy rearview mirror at the economy, and it's a little foggier than normal.
But that gets to the issue too, is
Right
that
now,
even if we
I
do
know
see a
it's
material slowdown in
174.
hiring, does that mean
Was
we're also going to see
160s.
an increase in firings and layoffs? Because so far that hasn't.
That's
really
another thing is
So
on
far, that-
60s.
yeah, you're exactly right. The increase in unemployment has been just due to
Mm.
softer hiring. However, usually when you see that rise in firing, you're pretty well into a slowdown.
It has all the probabilities of a breakup tomorrow, of a gap up.
If you wait till then, you're already probably obviously in a
Man,
recession. So
fucking
we haven't seen
wrong.
that yet. We're hoping to stay out.
Which is exactly probably why they cut 50 yesterday, which is what Jay Powell made clear. Do you feel though that where rate cuts hold forward from 2025, or accumulatively there's just more than maybe we would have
Look
thought
at
8
this.
months ago?
Yeah, well, I think some of it may be.
It
rate
was
cuts that
yesterday.
were, rate cut that should have happened in July.
Okay.
Right?
Yesterday was
Was pretty frank
they
about
were open at this
conceding
level,
that
and today,
central bankers never.
the day before, we were here.
He
We open
owned
here,
up to that,
close
maybe
here.
why
I
we
think
saw that 50 yesterday.
we should,
I'm not
I
sure
don't
what
know,
pulling
maybe
forward,
cap up at
well, I suppose we are
37
pulling forward not only from
again.
25 but from 26 because the end state here has always been to get back to neutral. They
More
haven't
profit days.
signaled yet that they anticipate going into accommodative territory. That neutral is a little higher than it was, but ultimately they're still getting to the end state, which is a little nice.
And that's what I'm confused, because it feels like the disparity between those that think that neutral is like has a 4 handle, or like a 3, or like maybe a 2 is quite large depending on who you're talking to. And that's a very different economic cycle depending whether it has a 4, a 2, or a 3 in front of that.
I don't care if it is green, because if you open with a gap up down here,
That's a 2 or 3
a green
handle,
candle
still
will be bearish.
as you get out to the broader private sector, you're gonna get, of course, wider dispersion. You're right, there's a lot of uncertainty there. I think, as Chair Powell has made clear, that's not gonna be guiding the decision every 6 weeks. And that's, I think that's appropriate.
With regards to just broader health, I mean, beyond just the labor market, there's been a lot of issues or concerns, I should say, with regards to consumer spending. It hasn't quite shown up in the data, but we've certainly heard from a lot of corporations that have made it clear that people aren't spending the way they used to spend, at least not on discretionary items. How are you viewing that sector of the economy right now? And is it going to be more of a concern for the Fed over the next 6 months?
So I really can't divorce.
Okay, so we are we are far from break even.
The balance sheet still looks fine. It doesn't look.
But this is getting close to the moment.
Healthy as it did a year or two ago. But
that it decides.
Most of the metrics we see look pretty decent. As I mentioned, the actual spending numbers are still solid. However, that's really being driven now by labor income growth. Right? With the saving rate down to 2.9%, it's unlikely that consumer spending is going to be driven by further declines in savings. So we really need to see nominal labor income continue growing, and that's why any falter in the labor market would then ricochet.
Yeah, he's so fucking tired after this.
Side of this,
Look,
right?
look.
Because at the end of the day, you have a lot of
It's the balance.
watching everything that's going on.
Oh my god, the
and it can be a
balance,
little scary.
the red fin.
So, this kind
The
of
red
circles
fin
back
call
to
is
the
destroyed completely.
some of the sort of indicators we're seeing. Maybe this isn't a measurement distortion, but the link between economic sentiment measures and the actual economic performance seems to have a lot more slippage than it did in the past. And there is some concern that this may be, a residual of the polarization that we're seeing in our society, and that affecting even simple things like how people see the economy.
So a risk that we could see a reheating of inflation and a reheating of growth and demand on a jumbo cut in the cycle. True, false? What's your probability of that?
I don't see that right now as a huge risk. I mean, we didn't have that big of, we don't anticipate that big of a move in things like mortgage rates that would cause the housing market to suddenly, pick up steam. Now, if we go into a more aggressive easing cycle rather than just aggressive ease, that is a risk. But if we don't like uncertainty, you shouldn't go into central banking. There's going to be risk both sides, and certainly that's the one. That's one they're trying to balance here.
Well, there's a couple of members of the Fed that I don't think quite understood that, but I guess we're going to start to hear from all those people. Fed speak, Alex. I know you love it.
Love it.
So does Michael Ferroli.
Look at Apple.
Business chief economist over at JP Morgan. We just got about 20 so minutes until we get to the closing bells here on the day, a day where we're seeing meaningful outperformance in mid-cap stocks. The S&P 400 mid-cap reclaiming its record high today. We're going to highlight
Master
some
of your
the
mind.
in that index as part of our stock of the hour. It's up next. This is the closers on Bloomberg.
Palantir is getting up. It's foot. No, there's a lot of things to do, right?
European countries need to think, do you want to compete as a small country or do you want to compete as Europe? I don't think they have a choice because the US and China have already started the race and Europe needs to follow. There isn't a European company in the top 20 largest firms in the world. That is a problem.
What does it mean for individual countries within Europe?
You can have more control and less growth, or you can have less control and more growth. If countries trust each other more and they build more
actually
European
they training
champions
it, I
rather than
think.
each country having its own national champion, growth is going to be
The
better.
way they are
productivity
chasing.
growth is going to be better. The welfare is going to be better. But there is going to be less control at the national level. So right now, each European country wants to have its own telecom company, its own couple of large banks, its own large energy companies. And the question is, are you willing to surrender some of this control to European firms, which are going to be more productive, but you are going to have less control at the national level?
Ever wish you had more hours in the day? It's time to digitally transform how you work. Bloomberg has been building and implementing AI solutions for more than a decade. Now we're putting tools enriched with AI and NLP output at your fingertips. New APIs connect IB, the terminal, and your firm's proprietary systems. Automate workflows, drive efficiencies,
Anything
and
can
reduce
happen,
context switching. Discover how you can transform your desktop today.
From the world of politics to the world of business, Joe Matthew and Kaylee Rhymes deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern only on Bloomberg.
Strategy. Oh my gosh. Nice. No, it was nicer. It got dumped.
Very little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan,
Here comes the dump.
it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
I think the important thing will happen tomorrow.
Just about 18 minutes until the closing bell, green across the screen with the S&P 500 at a record high, up 2% on the day. But get this, so too our S&P 400 mid caps, a 1.7% gain on the day, giving it its first record high for mid caps since July. Low valuation, solid economic growth. Some folks saying that implies more upside ahead. Abigail Doolittle joining us right now to talk a little bit more about this. We're looking at the Russell there, small caps, but let's start with the mid caps here, because obviously, in theory, those names probably are in a little bit better of a financial position than some of those small cap names. And that seems to be where some people are gravitating to today.
Yeah, I mean, those companies, the mid-cap companies, are going to be a little bit safer in terms of their balance sheets, their financials, the businesses that they have than the small caps. So yes, we're seeing this record high. And it's not just today. We've had this rotation into the small caps and the mid caps over the last few weeks into this Fed meeting, which is really interesting because while we had that, the NASDAQ 100, its last record high is back in July. So the S&P 500 ahead of the Fed yesterday flirted with a record high, then has put one in, whereas the NASDAQ is still trailing. So the big tech companies that have done so well all year, we've seen this catch-up trade for these smaller companies, people really expecting that Fed rate cut to help, and the fact that it came in 50 basis points certainly juicing it.
And go ahead.
I was going to say that's a good point about the NASDAQ and it's trailing. I mean, the S&P is hitting that record high, the mid caps, but then you see big tech still kind of like.
Yeah, like outperforming on like a percentage basis today, but like on a relative basis from that, no. What's interesting is Bank of America sort of heightened my awareness of the mid cap, saying that that's a sweet spot, right? You don't have the same kind of risk of debt as related to small caps, but you don't have the valuation issue that you do with the large caps. And everyone I've talked to since then is like, yep, big caps is my jam.
It's so interesting. I love the fact that we are talking about mid caps because in a former life, when I worked for an asset manager, you know, like one of the style and the size, mid cap, that was a big piece of the portfolio, you know, between the large, the mid, and the small. But typically here, we're not talking about mid caps, but now because of the love that this, you know, sector, this size is getting, capital size is getting, for those very reasons, you just don't have the risks that you have with the small caps. I mean, think about it this way: in the Russell 2000, there's 2,000 stocks. You know, the mid cap 400, there's 400 stocks. What's interesting is the divergence between the SML index, that's the S&P 600 small cap. Now today up just slightly. Now on the year also up less than the Russell 2000. So the gaining money is considered to be the higher quality small cap index. So the gainier money going into the Russell 2000 more so than that S&P 600. It tells you that there's risk on animal spirits during today.
We should point out the SML did gain some traction here on the day, now up about 1.9% on the day. But it gets to the broader question too. There was a great note out maybe like a week or two ago from Goldman saying that this could be kind of a Goldilocks situation for mid-cap stocks. They were actually projecting 13% upside. Just through the end of the year, mid-cap.
To me, it looks like a park.
This all ties back into the idea that what led to the big sell-off in those names, at least for now, that appears to be they're out of the woods.
I'm so puzzled by my Bloomberg terminal right here because I'm seeing 0.09%, but it also looks like it was a little bit frozen. I'm not quite.
Yeah, we can get to that later.
Yeah, quite sure why, but I'm glad that you're correcting me on that. So big year-to-date figures as well. You know, in terms of stocks being out of the woods, I think that it's too early to say that. Just from you guys know I love a good chart. We still are range bound, and the most important stock in the index, it's not small cap, and I think you can probably guess what I'm going to say. Nvidia here, it is as good of a day as it's having, it's still bound by resistance. It tells you that nobody's convinced that this liquidity stream is gonna be strong and far enough.
Yeah, all right. Abigail, thanks a lot. We appreciate it. Bloomberg's Abigail Doolittle joining us there. Sectors of the hour, sort of size of the hour instead of stock. All right, we're about 15 minutes away from the closing bell here. Looking at the NASDAQ up by 2.6%, the S&P up almost a full 2 percentage point. Coming up next, we're going to take you to San Francisco for Salesforce annual Dreamforce conference. And Lei Chang standing by with Salesforce CEO Mark Benioff.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your
Let's watch the Wall Street Journal. What was the main topic? Yeah, I think main issue today was just Israel and
because of the fact that they raised it in 2021 or 2022, and no one really wants a down round.
and like the rise of today after the hedge fund, after the Fed cut.
Let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about things that are outside your control? How does the current fighting completely stop? I'm Francie Macklin, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
The top names at Jackson Hole are on Bloomberg.
Inflation's kept coming down, so in the real rate sense, we've been tightening. I think that this reflects the reality of the economy. We've got to keep our eye on the employment side of the mandate now. This is what the path down to 2% inflation looks like.
Nobody covers Jackson Hole like Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With the surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials
the
accountable.
transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Preeti Gupta. And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
What could you do if your data was working for you and not against you? With Bloomberg delivering enterprise data directly to your systems, you get easy access to the details you want, optimized for higher level analysis, and financial data experts committed to helping you maximize your every move. Our data is made for more, so you can show the world what you're made of. Visit Bloomberg.com/enterprise data to learn more.
This is the countdown to the close. I'm Romain Bostic.
And I'm Alex Steele. You're still taking a look at a market right around a record high.
Kind of interesting to see this delayed reaction to that Fed report. I know we've seen this in the past, but kind of interesting. We saw a bit of a sell-off yesterday, but today, one of the best rallies we've seen in quite some time. All right, Chris, so keeping an eye here on the markets as we move closer to those closing bells with just about 10 minutes to go. We do now want to welcome our Bloomberg Television, radio, and YouTube audiences worldwide. We want to go out to San Francisco, where Salesforce is holding its annual Dreamforce conference. The software company unveiling its AI strategy. Pleased to say that Bloomberg Originals host Emily Chang sitting down right now with CEO Mark Benioff at her side. Emily, take it away.
Romain, thank you so much. Mark, it's always great to be here with you at Dreamforce.
Any of the markets are giving me the last chance to close this, to be honest.
Agentforce, of course, and you
I
rolling
don't
that out is a
trust
big thing. I've been talking to some of
market
your
open
customers.
tomorrow.
They're very excited. Tell us
Not
about
quite
what
fully.
LLMs you built this on. Is it OpenAI? Is it
I've never
Anthropic?
seen the customers more excited. And the reason why is these customers have been convinced something that's not true. That they have to buy an LLM, they have to go to a hyperscaler, they have to get a database, they have to buy a security technology, they have to choose a chip. They have to hook it all together themselves. They have to DIY their AI. It's not true. You do not have to DIY your AI. And when we started the show, they didn't really believe it. So that's why we created a whole factory across the street, as you saw in Moscone West, where we put more than 10,000 customers through already to show them that on the Salesforce platform, which they've already been committed to for more than 20 years, we've had great success in sales and service and marketing and communications and commerce and analytics and Slack and all of these technologies that now they're also building AI. And this is a shock to them, and it's exciting for us because we're showing them how, once again, we're future-proofing their company with the Salesforce platform.
So you basically DIY'd it for them. And
Well, that's
can
our
you tell us
software.
what models you built it on? Is it
We have our
OpenAI?
own,
Is
we
it
have many,
Anthropic?
and they don't need to know. And they don't, why, what chip am I using? You know, what hyperscaler, they don't care. They don't care what I'm using. You know, it's like, what type of flour is in the cake? What kind of sugar did I buy at the store? Why does it matter? Do you like the cake? Is this the final product that you like?
All right.
And I think that for our customers, they don't want to know all the pieces. They want to know, does this work? And can they make a greater success for their own companies? And so when you see like a company like, you know, Wiley, who's here, and they're like, lower their cost by 50% day one.
Right.
And that is the power of technology that we're going to help them make it easier for them, lower their costs, deliver a high ROI. The Salesforce platform just delivered that.
Let's see if
So let's
someone
talk about
comes
how it
in.
works. You know, a lot of companies are rolling out agents now.
Hi,
ServiceNow,
Palantir.
Microsoft.
Let's see if Palantir is
This isn't
me.
just another buzzword like
At least
Well, I think you know that I
fun
think,
thing
and we all
to-
know now that Microsoft Copilot is basically the new Microsoft Clippy, that customers have not gotten value from it. You know, these LLMs,
like the Nasdaq is not having
we're
a
selling
good day at
science
all.
projects to companies, and they're tired of it. They have not gotten the value, which is why you see these customers so excited. They're coming here and they're getting immediate value, and they're able to use this next generation
Oh,
platform.
there you go. At least some support at the end of the day.
Create an agent is a great example. How do I find
Let's go. Now we are rising.
for an agent?
Now this is helpful to my account.
All the data's in the Salesforce
Finally.
platform. All of the metadata is there, the logic is there, the workflow is there. They're just adding agents into their existing workflow. And no one knew it was possible before the show, so we knew that because we hadn't created the product, and now it's so exciting because we've onboarded tens of thousands of customers, and we've convinced them you don't need to DIY your AI. You can just use, and you're going to get the best AI, the highest accuracy, the lowest hallucination rate. Our customers are saying in many cases it's 2x the accuracy of the best models.
No one is joining me. Why no?
It's going to be smooth sailing. Disney actually just announced they've
Why
bought
don't
Slack.
you join me?
They got hacked and said they're switching to an enterprise
I'm too creepy.
collaboration tool, which sounds maybe like Microsoft.
But at least Palantir is making me money. $11,
What's
bitch.
your, response to that?
Something is something.
I think our security is rock solid. This is really important.
$13 on the
There's no
green.
finish line when it comes to security, but companies have to also take.
Oh
the
no,
right
maybe I
measures
should.
to prevent phishing attacks and to lock down their employees from social engineering. So we can do our part, but our customers also have to do their part. That's extremely important. But the second thing that's important is over 25
Come on,
years,
no one viewer.
most trusted, most secure,
No a single
most capable
viewer.
model. Disney's a great example. They run the Disney Store on Salesforce. The Disney Guides are on Salesforce. All of the sales and service operations, Disney Plus call center and contact centers on Salesforce. We are the customer service capability.
Salesforce.
And they're
Who is that? The
right,
CEO.
actually for our new AI system. So our next
Salesforce,
generation AI was
CRM,
actually
CRM.
Disney. It's amazing.
Says,
They've shown us
oh,
incredible
5% up today. No, the stock haven't seen a
future success with Disney, but it's incredible
rock
that
solid.
customers are able to see this value from these platforms. That's what's really exciting.
And let's talk about the money, because I'm curious about
Let's
how you
talk
got
about
this
the
$2
money,
per
always,
conversation, just
baby.
how much additional revenue you think Agentforce is going to drive?
Well, look, our goal is very simple. We want to get what we call 1 billion agents, in place for our customers within the next 12 months. And that means we're going to have to deploy
Next time he's going to test 37. I'm pretty sure.
to build this huge blanket with all the
It was scary. Like everyone thought, like the profit taking continues. The profit taking continues. No. Not yet. Not yet.
building a huge data cloud.
Fuck it.
And all
Let's
your
go.
agents
37. 37. Make me a few bucks, please.
And that idea that it's one
And
piece
can
of
close. I
code,
have
then
4 minutes to close.
of course, we
4
just
minutes.
charge, per email or
We are far from.
transaction, and now
I don't know. Should I leave it? I will kill one day trade. That's a lot. If I kill a day trade, it's a lot.
So it's a mix of two different
I shouldn't kill a day trade.
But we're of course
Oh
working
my
with our
God.
customers and
Oh
we have
my God.
tens of thousands of customer facing who work with them to make the right agreement with our customers every single
How much money do I have?
It's great to be with you here in person and to see
Always fun to be with you.
Agentforce
Damn it. Tempting. Very, very tempting.
Salesforce Chair, CEO, and founder Mark Benioff. Good to have you. I'm helping you for our guys. I'll send it back to you.
Salesforce CEO Mark Benioff there, out there in San Francisco with Bloomberg Originals host Emily
What's
Chang.
going
here
on?
at the
No.
Dreamforce Conference, of course, talking about security surrounding AI and, of course, those new AI products that he has been pitching. We are moving closer to those closing bells. Full market coverage coming up right now here on Bloomberg.
Delete it.
Closing bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close
What am I?
starts right now.
I'm in freedom, man.
And right now we are 2 minutes away from the end of the trading day. Romain Bostic here with Alex Hill, taking you to the closing bells of Global Simulcast. It continues right now. Bonnie Quinn here in the TV studio, Carol Nasser in the radio booth, Matt Miller by her side, filling in today for Jim Senedick. All of our audience in tune right now, Carol. What is a massive rally across the board in U.S. equity markets.
Yeah, broad-based buying in a big way. I'm just looking at something like the semiconductor space. You look at the stocks, it's up about 4.2%. All 30 names in that index, Matt, are higher today.
Yeah, it looks like one of the biggest reactions that we've seen on the day after a Fed meeting since 2008. And it's interesting that yesterday, I'm sure you've been talking about this for the whole program, Romain, but yesterday we had the market retreat, and I guess something happened overnight where they said, no, actually, I think this is where the 2% pop.
Damn it. I don't have even one viewer. Give me one viewer.
I don't know, but it's fascinating
Oh,
because we had almost
fuck.
all of the sectors absolutely higher. So if you look into the map of the S&P 500, there's really very few that are lower. Maybe utilities, a couple of them more defensive
It
based.
is
Even
okay.
home builders as a group were lower today.
I'm gonna say it's about options tomorrow, guys. So you had 50 basis point cuts. You have the biggest September expiration for options. We're looking at over $4 trillion worth of options expiring. You're gonna have to change your positions for that.
Yeah, and it's interesting too on a day like this to see the moves in the treasury space, which is actually not a whole lot of moves at all. We're going to get back to that in just a
Damn
second.
it, it's already closed. No, it's impossible. No, it's closed. Shit, the clock is.
Industrial average going to close above 42,000, up a more than 500
Damn
points on
it.
the day, or roughly about 1.3% is
We closed.
to settle. The S&P 500, 5713.67. That's a record high, up 95 points from where it closed yesterday, a 1.7% gain. We should also point out that the Nasdaq Composite was still far from its fresh record high, Did add about 440 points today, or about 2.5%. The Russell 2000 getting in on the action as well. A gain of 2% on the day. And Carol, I just want to mention S&P 400 mid caps up 1.7% here on the day. That is also a record high here. So interesting to see what's hitting a record high today. It's not tech, it's not the Russell, but some of those mid cap stocks.
Yeah, right, broadening out. We've talked about this with a lot of strategists, and this is what they want to see maybe a little bit of a healthy market, if you will, in terms of gains. Having said that, back to the big caps, I go, Romain, you mentioned this, 351 names in the S&P 500 gaining ground on this Thursday, and 148 bonding to the downside.
Exactly, nearly 2/3 to the upside, as you mentioned, Carol. Let's take a look into the map of the S&P 500 and look at that green practically across the board. As I said earlier, just a couple of defensive sectors a little lower, but really, consumer staples has moved down 0.6%. Not much to write home about when you see the outsized moves to the upside for the likes of information technology and consumer discretionary. Interestingly enough, even as we talk about the consumer weakening potentially just a little bit, we are seeing discretionary perform extraordinarily well off the back of that 50 basis point cut.
All right, so with the S&P 500 closing at its first record since July, the number one gainer in the S&P 500, everybody, Darden Restaurants, right? Up more than 8%. I know, who doesn't love, like I said tonight.
America is back.
There's no way that you go to Olive Garden here. I highly point this out.
My dad used to love Olive Garden, and so I would go and get that tour of Italy with him. Yeah, I think that was sweet.
It sounds lovely.
It was really fun. All right, Darden Restaurants up more than 8% here. Company announcing a new delivery partnership with Uber Technologies, saying sales will continue to improve.
A huevo.
Customer traffic in July, people were a little bit worried about that. Also signaling it's succeeding at attracting cash-strapped consumers into eateries. So big outperformer there. I mentioned the stocks, really outperformance there. All names in the stocks higher today. Advanced Micro, though, among the outperformers at 5.6% in today's session. We really did see that Fed move give a juice to the sector, also some of the AI names in particular. And then NVIDIA, I want to point out that's another one that gained in today's session, and you saw that one up about almost 4% today's trade. And then I just want to mention something a little bit different. Edgewise Therapeutics, it's about a $2.5 billion market cap biotech company, and this
¿Qué
one,
pasaría if I listen to
54%
myself?
today's session. The company provided top-line data of its investigative therapy for heart disease in
What?
trials. Investors liked what they heard, and so this one really soaring today's trade.
All right, I have some movers that involve diseases as well, so I can top that. On the downside, right? 4D Molecular Therapeutics, FDMT.
Hey, Matt, I'm going to interrupt you here. We're actually getting FedEx earnings out right now. The shares plunging in after hours trading. The company providing a revenue for the first quarter, its fiscal first quarter, of $21.6 billion. That's slightly lower than what the street was looking for, of 21.9. Adjusted operating margin, a big miss there, 5.6%. The street was looking for 7.4. Operating income, 1.21 billion, a big miss there. The street on average looking for 1.63. And on the EPS side, $3.60 a share. The street was looking for 4.77. And here's your forecast, and it's not good. The company's saying that full year adjusted EPS will be in a range of $20 to $21 a share. Its previous forecast was 20 to 22.
That is awful. You know, when I talk about the economy in relation to the Fed, right, I'm like, these rates aren't restrictive because we're looking at 3% growth and earnings were up 11% and then unemployment's only 4.2%. If someone said, well, FedEx, the global bellwether, is going to miss on earnings and also on the outlook, I would say, okay, cut rates. That makes sense to me.
And remember that they had a fantastic quarter the last go around. I mean, they had a bullish forecast, the stock surged. I am curious, I don't see anything specifically about the consumer yet in their report. Also, remember, there's some questions about its freight unit and if they're going to spin it off, what kind of valuation that would present to unlock value, which after these numbers, you would think would be a very, very high priority.
Right, and we've been coming out of a freight recession, and so the hope was that we would see more of that this quarter round. Volumes were improving, but I guess FedEx's cost-cutting, efficiency measures, all of those strategies haven't come to fruition, at least this quarter, Carol.
All right, so FedEx is down about 12% in the aftermarket. Looking at UPS, it's down more than 3% in the aftermarket. Some commentary from the FedEx president and chief executive, Raj Subramaniam. He says, despite a challenging quarter, we remain focused on transforming our network, improving our efficiency, lowering our cost to serve, and enhancing our ability
Okay,
to
FedEx getting destroyed.
dynamics. But obviously, those evolving market dynamics are turning out to
Really
be a little
missed.
bit difficult for FedEx. Again, that's stock down almost 12% here, guys, in the aftermarket.
And it's kind of interesting too, of course, this is the first quarter where we sort of had the reorganization of those units, and this is the first time they've reported under that. And it does make you wonder how much some of this is idiosyncratic, specifically to FedEx with regards to its costs, which are still high, its CapEx spending, which is still high. And if there is a macroeconomic situation where we are going to see weakness in shipments or weakness in the price that FedEx can charge for those shipments, that's not going to be good.
Yeah, no, I mean, this is what I think big macroeconomists look at to sort of judge, to gauge the health of the global economy. Now, just because you miss estimates doesn't necessarily mean it's that bad, but you have to be beating what you had in the same quarter last year to show some kind of growth, and it should be consistent with at least the 3% growth that we're seeing that the Atlanta Fed Now forecast sees us running at in the current economy.
Yeah, well, therein lies the rub, right? They say a low single-digit percentage revenue growth rate year over year versus their last forecast of low to mid single digits, right? So that feels like that is a pure demand economy point, as Carol pointed out. Demand trends weaker than expected. I'm interested in the call though, guys. Were they going to talk about what they expect at the 50 basis point rate cut from the Fed? Does that change their outlook on how that's going to impact their business?
Yeah, that line on demand trends being weaker than expected, I want to hear more about that and what that actually means, because we're talking about the holiday quarter here at this point. This is when retailers are getting all their stuff. This is when the freight trains literally are running. So we'll see, it might mean that the Fed is right to go 50 basis points.
And this gets back though to that pricing issue. I mean, they say in here that they were negatively affected by that mix shift, as they put it. We talked about this the last quarter was a similar thing here. The volumes weren't necessarily suffering, but the type of stuff that people were shipping was not the higher margin or higher fee stuff that they shipped.
Yeah, meantime, the company completed a $1 billion accelerated share buyback during the quarter, and it also expects to buy back another additional $1.5 billion stock during fiscal 2025. So continuing to keep kind of that momentum in place. But, I always wonder, buyback, I get it, but is it always the best use of your money?
Yeah, no, I mean, that's probably trying to stand in the low, right?
Yeah,
They're like,
exactly.
we have had a horrible quarter and the outlook is really disappointing. Let's definitely buy back some shares, because otherwise our price is going to get decimated in the markets, and it literally has as we walk trade now.
Yeah, right now you can see the stock down about 11-12% here in the aftermarket. And again, UPS a little bit lower too, down about 1.8%. All right, guys, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. We will see you guys again, same time, same place tomorrow.
All right, let's get right back to it here on Bloomberg Television. Our coverage continues. We're going to have a further breakdown of those results out of FedEx, plunge in the shares in after hours trading, a conversation with the key investor, and a conversation with someone with a big read on the supply chain space. That's coming up next here on The Close on Bloomberg.
So a number of people, I think from Homeland Security and or the CIA or NSA, have gone to Capitol Hill and said that TikTok is a danger to our national security, but the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely in the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements, and TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
What could you do if your data was working for you?
Qué complicado. So complicated.
Enterprise data directly to your systems, you get easy access to the details you want, optimized for higher level analysis. and financial data experts committed to helping you maximize your every move. Our data is made for more, so you can show the world what you're made of. Visit Bloomberg.com/enterprise data to learn more.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Welcome back to the Colors. I'm Holly Quinn.
And I'm Romain Bastia. Quite a day on Wall Street. The Fed reaction, a delayed Fed reaction, if you will, and it was a reaction that a lot of folks wanted to see. The Dow Jones Industrial Average, a record high. The S&P 500, a record high. S&P 400 mid-caps, a record high, and that is a big part of the story, Bonnie. A rotation, an embrace of not just big cap stocks of big tech, but of course some of those economically sensitive sectors that have been lagging for months.
Number 39 in terms of records this year. Of course, there is only ever one record, right? But you have to wonder, are we going to see more of these? We want to talk about FedEx in a moment because that could have an actual impact on the market entirely tomorrow. But first, a couple of these major movers. Darden Restaurants, we've been following all day. It was the best performer in the S&P 500 today, up more than 8.25%. Bear in mind, that only brings its year-to-date gain to less than 5% for me. Anemic sales, obviously, at Olive Garden with Chris and so on. It is adamant. It is not offering discounts. I'm not sure if you've noticed, but there have been a huge spate of price wars around the burger joints, and I guess Darden won't play that game. We also had Airbnb with another great day. It's been on a string of runs now, really, since that Bernstein note. 128.75 up 5.2%, still down nearly 5% this year, but volume extremely strong in that name past few sessions. Keep an eye on it into tomorrow and next week. And then, of course, we have to talk about FedEx because to look at that, you wouldn't know what kind of a day it had post 4 p.m. It obviously ended the session higher, down now 9.7% after getting earnings. Investors, at least in the aftermarket, not pleased with what they're seeing in terms of EPS, in terms of cost cutting, in terms of what it means for FedEx's next quarter, and in terms of weak demand.
Most recent quarter just ended here, adjusted earnings per share of $3.60 a share. That's a key number because the street was looking for $4.77 and a cut to the top end of its full year profit outlook, really rattling investors right now. Let's get some insights on one of those investors. Andrew Graham joining us right now. He's managing partner over at Jackson Square Capital. And this caught a lot of people by surprise. We know FedEx has been dealing with a lot of issues, but I think there was this hope that they were kind of starting to turn things around. And when you look at these numbers, and I know you only had maybe a few minutes to digest them, is this about FedEx specifically, or is this more about the broader economic ecosystem?
I think it's both, Roman. I honestly think it's both. FedEx has got a ton of overhead and excess capacity, as does UPS, and the shippers are trying to take advantage of that as much as possible. So pushing back on pricing. Consumers think that shipping and parcel delivery is free after all. And obviously it's not. And so they're still burning through that excess capacity in sort of an uncertain macro backdrop. Both companies are. I think there was a little bit of hope for this quarter because UPS put through some relatively egregious surcharges, and the list of surcharges goes on. And FedEx basically matched all those as well. But still, they managed to come in below buy-side expectations, which were roughly $4.50. And then, as you mentioned, consensus at $4.77. So weaker Q2 guide, weaker full-year guide. That's all bad news. Stock pulling back, and I think that's giving people an opportunity to buy it for the idiosyncratic reasons, which is why they bought it 3 months ago.
Well, I mean, talk a little bit about those idiosyncratic reasons. I mean, Raj Subramanian has been on the job now, I think, 2 years. He just had his 2-year anniversary back in June or July of this year. That's not a long time, but it's not a short time. He's had time to try to sort of make his mark and articulate to investors what his long-term vision is for FedEx. Are you buying into that long-term vision? Do you think it still stands?
Yeah. Yes, I do. And the stock's basically coming back to where that, where the second idiosyncratic driver. The second idiosyncratic. Let's start with the first one.
It has delay. Damn it. It has delay. But why it doesn't show one person, Bob? Damn it.
I believe is going to add torque to an already return to normal. And I think what you're going to see is FedEx margins improving faster than a lot of the other transport names. And then the second idiosyncratic driver is a potential values this company on some of the parts valuation basis. So Raj said back, 3 months ago that they were going to do a strategic review of the freight business.
Yeah.
And that means a spin, in my opinion. There's reasons why it wouldn't be an outright sale. So they're going to spin this out, and when they do, you're going to unlock a ton of shareholder value. So that's why people are in the stock. That's why they bought it. That's why the stock had the run up. It's coming back on earnings, basically in the middle of where that gap was.
Right.
And I think people are still going to want to own the stock for that event, which we're going to hear what their plans are at the end of this year, at the end of the calendar year.
We're in conversation right now with Andrew Graham over at Jackson Square.
Damn it.
Andrew, we do have some breaking news on Nike, a new CEO being named over at the company.
New CEO.
For a few months. Elliot
New
Gill,
CEO now.
President and Chief Executive Officer of Nike, effective October 14th.
Now we have a new CEO, Nike.
We don't have a lot of details on that, but you see the share price reaction.
I hope my Palantir goes up. Have calls in Palantir. Damn it.
Earlier this year, of course, with the departure of
Nike's up 6%.
Kind of filled that role for a while. We knew that would be temporary.
6% in up in Nike.
Previously returning
9%.
Exactly, and
Nike's up 9%. 9.
Nike, and we had been with the company at least since 2000.
Let's go, Nike.
2020, so we'll see how that impacts the stock price. So certainly today, we did see Nike along with some of the other segments that really not do too much. But
Can't
Nike's
believe it.
had a troubled few months, a few quarters roaming. It hasn't had the kind of outperformance that it would have liked to have had.
Yeah, and we should point out too. I mean, there was a great story that our team here at Bloomberg wrote last week here about sort of the big change that they made at the top, of course, with Don Ho, and this idea of this quote unquote playbook. This idea that you had a previous chief executive there.
This has to be on the
Nike culture,
on Discord.
Culture, marketing culture, and they brought in John, who was more of a numbers guy. I mean, he was a smart guy. He knew how to run a business here, but he basically
change
sort
of CEO.
And all this stuff. And what ended up happening was, you just had this influx of certain shoes, like Panda Dunks, which are everywhere. Unfortunately, as you know, in fashion, everybody's wearing the same thing. Eventually, everybody wants to wear it.
Elliot.
And that was the problem they ran into here. But it may be a little bit
Here.
clarity going forward. I want to give our thanks though to Andrew Graham. Apologies for cutting him off.
It's
Andrew Graham
insane,
over at
bro.
Jackson Square Capital. We will continue to keep an eye on FedEx as those shares continue to plunge here after our trading. We'll also get you some more info on Nike as well. When we come back, though, that conversation on FedEx continuing with a deeper dive into the broader freight industry. Who better to talk to than Craig Fuller over at Freight Legs? This is Bloomberg.
You up to the minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Ever wish you had more hours in the day? It's time to digitally transform how you work. Bloomberg has been building and implementing AI solutions for more than a decade. Now we're
That was a huge mistake, bro.
and NLP output at
Why I
your
had to sell, bro.
New APIs connect Ivy, the terminal, and your firm's proprietary systems. Automate workflows, drive efficiencies, and reduce context switching. Discover how you can transform your desktop today.
From the beating heart of global finance, economics, and politics,
I think
wherever newsmakers are
it won't help hold.
Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about things that are outside your control? How does the current fighting completely stop? I'm Francis Macron, and this is The Pulse.
No.
The top names at Jackson Hole. Bloomberg.
Inflation's kept coming down, so in the real rate sense, we've been tightening. I think that this reflects the reality of the economy. We've got to keep our eye on the employment side of the mandate now. This is what
I think it was higher, like a 194.
Nobody guards Jackson Hole like Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything.
All right, keeping an eye on two of the biggest movers in after hours trading, Nike to the upside and FedEx to the downside, a 9% plunge in that stock on the back of a disappointing earnings report and raising a lot of questions about the health right now of the shipping market. Who better to talk to than Craig Fuller? He is the founder and CEO of FreightWaves. And Craig, look, I know FedEx might be its own individual story, but
Wow,
even before we got to FedEx,
everything got
there was a lot
sold.
of talk about capacity in the shipping space, in the U.S. shipping space, particularly when it comes
No,
to trucking.
pardon.
And the idea that maybe we just still had too much capacity on the road for the number of packages that were going to be shipped. What are you seeing?
That's absolutely the case. We've coined this the Great
Etienne
Freight
face,
Recession.
Etienne face.
We're now into our third year and one of the longest downturns in freight history. So if you sort of
Damn
look
it.
at what's been taking place, the freight market, the domestic freight market collapsed in March of 2022 and has not recovered since then. And we're looking at potentially the second half of the year also being challenging and not showing really any significant signs of recovery so far.
Has there not been consolidation though, Craig? I mean, I know there's been a few deals here and there in the trucking space and even on the sort of broker space with the RXO earlier this week announcing a deal, but I assume that's not been enough to really solve the problem.
Well, brokers don't really consolidate because ultimately
Let's see if
it's a
someone
capacity
joins.
situation that's actually having assets. Brokers don't control those assets. So when you see brokerage transactions, think of it like a
Palantir
trading,
calls are getting
one
destroyed.
group of traders buying another group of traders. Brokers are effectively
This
the day traders
one
of the market.
viewer,
They
man.
don't
Only
really
one viewer.
impact the capacity map of the market.
Palantir.
What does impact the capacity map of the market is
Nervous.
really bankruptcies and consolidation.
Palantir is
And
getting no
largely this is a
view.
bankruptcy story. Yellow
No view.
left the LTL business. It was it had about 9% of the LTL market when it left the market. And that created really nice tailwinds for a lot of the LTL players. And what we're probably looking at in terms of FedEx's challenges is those year-over-year comps in their freight business are going to be more challenging because they got the short-term benefit of Yellow's failures that took place a year ago. So they picked up a lot of volume. They got to reprice a lot of that.
Will it
freight
go
because
back to
shippers were scrambling
37?
for
It's a good
capacity.
question.
And now that one-time gain just isn't there. And so I think what we're seeing with FedEx
Today, what I
really
think
the
it was
economy, the
clear,
economy
like
is
we got
not creating a ton of demand or forward demand at a time when the comps are just more challenging.
Yeah, exactly. FedEx literally saying demand trends are weaker than expected. But if freight is a commodity, Craig, why are these supply and demand factors not coming into sort of balance? At this point, you would expect that they would, right?
Well, I'm glad you said freight a commodity because it's absolutely a commodity. But there's two sides of that supply and demand balance. There is the demand side of it, which is one story. And frankly, demand has been weaker than what most of the market would like to see, but not.
Are we see a really big pump?
The economic data.
And if we
See,
do,
the economy
I'm
is
close.
okay and doing okay. It has been doing okay.
I don't know.
The story that really matters is the capacity. It's the supply side of the equation. And frankly, what we saw during COVID was just a rapid expansion of capacity. We added 28% more trucks from pre-COVID levels to really the peak of the market, 2022. And the industry is still trying to get rid of all that excess capacity. And what's happened is that capacity has hung around a lot longer than what most companies expected and what most executives expected, and has really kept both pricing weak and volumes weak relative to the whole market. So what we're seeing is just too much capacity
Something about
and too much
Israel.
supply in the market that is keeping pricing low.
Tech
And it's
jobs
also
have dried up
volume
and
around
aren't
a
coming
lot
back
more
soon.
participants than what everyone would like.
Damn it, that's pretty awful. Damn it, 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 damn it.
CEO of FreightWaves.
Of course, FedEx right now, the biggest decliner, at least among major stocks in after hours trading.
Come on, Palantir.
Gainer, that belongs to
Give
Nike,
me
up
a
about
break,
9% on the news of
Palantir.
Elliott Hill, has been named as new CEO of the company. He starts in a few weeks. Joining us right now is Lily Meyer of Bloomberg News, who wrote a great story that was published last week about the outgoing CEO, John Donahue, former Bain guy, who maybe made a few mistakes. What's going on here?
Yeah, thanks so much for having me. So yeah, when we wrote the story, John was still CEO, and I think many Nike employees are going to be really excited that Elliot is coming back to the company.
And we should point out, Elliot is the one as well as a couple other executives who left when Donahue came home, right?
Exactly. For sure. Now, he's been with the company, or had been up until 2020. He's been with the company since 2004. Is he popular? And did he really get to make some great decisions there?
What? Yeah, I mean, I have to tell you, out of all of the employees and former employees that we spoke to, his name kept coming up. He's super beloved in the Nike community, and so people will be really excited to hear the news.
Well, given this, I'm not too familiar with his background, but given his background, because I thought it was interesting when Mark Parker left, there was this idea that he was like a sports guy, a Nike guy. He understood marketing, understood fashion, all those things that made Nike special. Donahue wasn't cut from that same cloth.
Like they always have something to keep
Elliot Hill is
the
more
show
akin to
on.
Mark Parker? Is that a fair way to describe it?
Yeah, I mean, I'm not sure how he compares to Mark, but I think the big thing about Elliot is he's like homebred. He's from Nike. He had a long career at Nike, and John was totally new. He was an outsider. He had been on the board, but he hadn't worked for the company before.
Yeah, and this gets to the idea as to what they need to do to
What was
change, right?
The man.
And for you should point out, Donahue did a lot of it.
Could
when it
fuck
comes
out.
to the tech side of the business, the direct-to-consumer. I know there were some concerns about the partnerships with third parties. How is that going to have to be sorted out?
Really curious to see what
Oh,
Elliot is
my
thinking
dude.
and what's planning to do.
My
I think there's a
booty.
big job ahead of him.
All right. Well, thanks for jumping on so quickly for us. Lily Meyer, she wrote a great story. I encourage everyone to read it.
Yeah,
Just
lol,
last
it
week
was
here, while talking about
it
some of the
was
issues ailing Nike
asking
and
for my
CEO
phone
now.
number.
The breaking news today: the next CEO is out. A new CEO is in. Elliot,
Damn it.
a former executive returning to the company, he officially starts according to the press.
Why would it ask your phone number? Yeah, that would be weird. Like it would be trying to steal your phone number or something. That sounded like a scam. Can you hear me, bro? Can you hear me now? Nabo? Can you hear me?
FedEx still down. This is the close.
Shit. I want to know if like one person is looking at.
Your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Welcome to the world.
No single person is showing up.
In Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto. But people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the
Oh,
technology.
this is why.
And these things grow the overall
This is
industry.
why I'm having problems
Bloomberg Crypto
with my crypto.
Tuesdays, only on Bloomberg.
So the last two news after the close was FedEx disappointing earnings, missed on everything, earnings per share and guidance,
I'm Kriti Gupta.
and it's down like 9%. Is it any they highlighted like a weaker demand, a trend on a weaker demand. So the stock was down at first 12%, now it's down 9%. I think something that's not something new on the stock market. Like I have seen that many times. The stock goes down and then it builds in the next few weeks. It builds the bottom and starts recovering. So I actually doubt FedEx is going to go lower unless the market crashes or there is a slowdown of some kind in the economy. But I think FedEx should find the bottom in the next few weeks. And we have the other news. The Nike CEO has changed. Elliot Hill came back. He was previously the CEO of Nike. So the stock goes up like 7%, around 8% after close. It's interesting because Nike was hit hard after their last earnings result.
While they on Wall Street and getting even wilder here.
And that's it, pretty much. We close. I mean, the Standard & Poor's closed at all-time high, almost. I mean, it made an all-time high during the trading season, the trading session. That let's see.
Up from 387 the previous year. Not quite sure what that compares to on the
Lena,
estimates here.
I don't know
but
what
you see
they
the share
do.
price reaction. Revenue also
They
coming in at
beat
about $9.4 billion.
by a lot.
The street was looking for 9.2. And here's your forecast. The company says that it expects new orders for the fourth quarter in the 19,000 to 19,300 range. The street had been looking for 19,100, and the company says that it sees 4Q deliveries also, Bonnie, coming in a little bit higher.
Damn it, fucking Palantir
22,500 to 23,000.
should have sold. I know this happened before. Oh my god, but why is it going down?
Seeing a little bit of a turnaround for home builders generally, even as we hear from the Federal Reserve Chair that, you know, housing
I don't
is
know
part
if
of
it
the
is
stickiest
normal.
parts of inflation. But we were expecting closing volumes here to rise 13%. Argus was saying the average selling price would be down 14%. So definitely dynamics in the housing market changing. Joining us now for more of a read into this literally is Drew Redding, U.S. homebuilding analyst at Bloomberg Intelligence. So Drew, did Lennar outperform as we anticipated? Is it
Palantir have to talk about really why did you have to mention Palantir? Damn it, Kramer, fucking Kramer.
Which was expected because you have to remember Lennar's operating philosophy calls for them to drive volume sales, and they're willing to give up some gross margin and able to do that. And it looks like with rates elevated through about a third of their fiscal quarter, it looks like maybe they had to ramp up their use of
Okay, and
incentives a little
Palantir
bit with
won
their
another
gross margin.
100 million US contract for AI targeting tech. AI targeting tech, nothing that move my skin. Yeah, I'm very worried because wow, it keeps going down. What's going on, bro?
Yeah, so Lennar builds pretty much
I
across
don't know why it's going down.
spectrum from the low end entry level to the move up and luxury market. Right now, they're one of the most consciously focused on price because they recognize the affordability constraints that are plaguing the market. So
I played it bad, pretty bad. I should have closed it. It's gonna hurt tomorrow, this one.
credits to entry level builders, tax incentives on the demand side.
I need to know why is it
That
down.
being said, we think it's going to be difficult to implement a lot of those supply side measures because they take time and there's a lot of challenges in their way. At the same time, when you talk about demand side stimulants, such as a $25,000 first time home buyer down payment assistance program,
I'm panicking.
I think that has the potential to be inflationary for housing.
That's interesting. And
Shit,
I
bro.
do sort of wonder then. I know these companies, at least the home builders. I mean, they're operating on a much different timetable than what most of us are looking at. They're looking 5, 10 years, more down the road here. Are there structural shifts right now in the U.S. here with regards to where homes get built, the types of homes that gets built, and whether Lennar is in that sweet spot to take advantage of it?
Yeah, so the public builders as a whole really
And
concentrate.
I want to know if
their
like this is normal, it's a
business
glitch,
around the South,
a lack of
most
volume,
markets,
or
and
what
the
is
rest of
it
the Southern
about?
states, really. That's
Why
where
is
all
it
the
down?
population growth has been. That's where the
Just for
job
Kramer?
is, and that's where all the builders are. And really, those have been some of the strongest markets in the country. In terms of what product they're building, there
Kramer
has been a
says,
shift
Jim
over the
Kramer
last
said Wells Fargo
couple
and
years
Company
to lower square
is
footage
going to
homes.
go higher
We
and
did
that
see
it's a
square footage
winner.
ramp up during the
On September
pandemic, so we're
17, the
looking
San
for space.
Francisco-based bank launched specialized application programming
Builders have found that they can
interfaces
address
for
affordability
its
through their
commercial
product
banking
offering,
clients, expanding
lower
its
square
API
footage, less
portfolio.
amenitized
These
homes.
APIs offer
Another way to
real-time
do that is
data
through,
access
higher
and
density
at
maybe even through
boosting
capital
sales,
construction.
improving liquidity, reducing credit risk, and cutting expenses for floor plan and channel finance clients. A billion-dollar investment strategy, trending now. Billion-dollar strategy with minimum as low as $10.
For municipal bonds. It's time now for
It's-
our uni moment.
it-
And joining us right
it
now
has
is Stephanie
had
Rosalier, head of fixed income
to
business
be
strategy and development
a move up.
over at
Kramer
Invesco.
said
Great to see
when
you again,
asked
Stephanie.
about Iron Mountain Incorporated.
Prior to the Fed meeting, there was a lot
Let's
of
move
talk
on.
this year at Bloomberg
On
about
August 1st,
Bloomberg
Iron
buyers.
Mountain reported better than expected second quarter financial result and
and
issue forward year 2024 guidance above estimates. Also, the company increased its quarterly dividend.
What's going on in the muni space?
Palantir Technologies, a cool stock, Kramer said. Fucking Kramer, damn it, I'm really worried right now. I'm really worried. On September 17, the company inked a multi-million dollar contract with Nebraska Medicine. As per the deal, Palantir will utilize its artificial intelligence platform to enhance healthcare through transformative technology. The Mad Money host recommended buying PG&E Corporation, PCG. The stock is a good one. Rate increase or no? Here, on September 12, Bank of America Securities Analyst Ross Fowler reinstated PGE with a buy and announced a $24 price target. So basically, he pumped the stock. Now it's dumping to the hell.
When it comes to munis, you mentioned high yield there. This gives people a little bit more cover to extend duration and more importantly,
Fuck,
go
man.
slightly down in credit quality.
What a momentum.
We think, when you look at high yield munis, they tend to be as tied to the economy as you can get. You're talking about your water, sewer, you're talking about your toll roads, you're talking about your hospitals, universities, all the things that we know and use on a daily basis. So there really isn't, I don't think you get closer to being tied to the everyday economy than you do in munis. And when we think of high yield, we're thinking of those projects that might be a little bit more speculative grade, but are projects that are necessary, are projects that sometimes.
Does it usually, I'm asking on Yahoo Finance, does it usually fall after the close?
Able to dictate terms on those deals and get really great yields that we can pass on to shareholders. We've got, 2 funds paying in excess of 5% tax-free right now. I think that's a pretty great deal.
What are the community of investors saying about
Can
whether
we
the
just
Bond tax break will or might be scrapped after the election?
Palantir, a small
We
pump
see this every single election.
after the close today.
Seriously, I think at the end of the day, when it comes to the tax exemption,
It sucks.
that is something that.
Well, tomorrow, I hope we see the thing past 37 somehow. Or I will be in real trouble.
But we don't think the tax exemption goes away. It comes up every 4 years, like clockwork, and it never actually happens.
The return for the junk part of the Universe has been about 5%, and for sort of the regular grade, it's been less than 0.5%. In fact, Stephanie, why is there so much money going into the muni bond universe, given that you could have got 5% anyway, just sitting in cash?
Well, 5% tax-free is a little bit different, and I think munis add a level of diversity that is very difficult to get in other parts of the market. You talked about, below investment grade seeing the bulk of that cash. Well, below investment grade munis, and we talk about high yield in the non-rated market, that tends to add a level of lack of correlation.
Man, they are all selling stock.
We have more and more where we're seeing, corporate bonds and equities being more highly correlated, but in the muni market, you do get that benefit of that diversification. I think a lot of investors are looking for that.
All right, great stuff as always, Stephanie LaRosa here. Go ahead and fix income.
It's tough, man. It's very tough.
And invest for our muni moment. And you did see some of those bonds.
What the fuck?
Muni indexes rally today here.
Why it's going down?
Today where a lot of people are really starting to price back in that proverbial soft landing. You see it on the screen there. The NASDAQ had a phenomenal day, up about 2.5%, but it's really about what everyone else did. S&P 400 mid caps hitting a record high, Dow Industrials also at a record high.
It's not setting off either.
VIX didn't rally. I can say that. But
What?
Still above 16. But we had Bitcoin rally, and we had so many of the commodities rally into the movie.
Yeah, a bit back into those commodities could actually be key and risk appetite back on top, at least for today, for the crypto space. Stick with us. This is The Close on Bloomberg.
I mean, I need to know if this is normal or not. It's what I need to
Stay on
know.
the lookout because markets
If it's
never
gonna
sleep.
close like
FX Pro trade like a pro.
Do you think there'll be the case where someday you will be an investment committee or I'll be an investment committee and we just apply AI, decide whether it's a good deal or not, or we're not going to be there anytime soon?
I don't think we'll be there in the near term, and David, because being on investment committees, there's the analytics of the math, there's the people, and then there's judgment. So analytics of math, I think AI will help us get way more refined. Right now, we have analysts building models upon models. Our typical investment memo is 86 pages. So we could refine that down very, very seamlessly to pieces. The people aspect to it, to make a judgment call on, do I believe this entrepreneur is going to go the next mile? Do I believe that the background of the entrepreneur, who they are, what they stand for, their values, their family, that's the harder one. I think AI is going to take some time to get there. And then the final piece ends up being judgment. And I don't believe we've seen anything yet that gives us a sense of judgment that we able to.
Ever wish you had more hours in a
There's no
day?
way the fuck
It's time
this
to
falls
digitally
down.
transform how you work. Bloomberg has been building and implementing AI solutions for more than a decade. Now we're putting tools enriched with AI and NLP output at your fingertips. New APIs connect Ivy.
I can't remember what I had. I had like $270, and somehow I turned it to 1K.
Context switching.
It's a Forex. So if I can do a Forex again,
With 2 hours of single stock stories that are driving the open and bell action.
I know.
Take you to Wall Street, Main Street, the C-suite, and beyond. Bloomberg Open Interest.
Yeah, exactly. If I do a Forex, I have 4K.
Your fixed income
I still have to do a 2 3x. Not easy.
right here on Bloomberg. Context changes everything.
I think it can bring greater access and promote markets, but at the same time, we have to guard against fraud. Fraud is fraud, whether you're using an algorithm to defraud the market or you're it's against the
Se ríe
law.
porque yo
I
hablo.
do think that there's a
Qué locura el
challenge.
internet.
Financial crisis is
Se
huge.
ríe porque yo hablo. ¿De qué hablas, loco? Háblame bien, o te qué te reí. ¿Qué hablas, loco? ¿A quién le hablas? A mí. Vos hablame bien a mí. ¿A quién le hablas? ¿Vos a quién le hablas? ¿Vos a quién le hablas? ¿Eh? ¿Vos a quién le hablas?
The UN advisory body on AI is
¿Vos a
out
quién
with
le hablas?
extensive governing
Loco.
AI for humanity.
De mierda.
That report outlines how to best address AI-related
Loco.
risks with a list of recommendations, such as setting up an international panel and a global fund. Joining us now for more is Alondra Nelson. She's a member of the UN's advisory body on AI
Enough.
and the director of the Office of Science and Technology Policy. Alondra, thanks for joining. I'm curious as to which countries might listen to the United Nations on this, given that
No, en
so
serio,
many
me está
countries
frustrando
and
esto.
groups of countries and intergovernmental bodies and so on are trying to be the global regulator on AI.
Well, thank you for having me. The report just came out today, and I think what preceded the report is really important in response to your question, which was a
The profit-taking is
resolution
serious
to the
shit.
United Nations General Assembly that said that AI governance should abide human rights law and the UN Charter, and was signed on to by all 193 member states and had more than 120 countries co-sponsoring it. So there's a
Cada
lot
vez peor,
we
boludo.
disagree about with regards to AI, but there's quite a lot. There's kind of fundamental anchoring principles that there's some agreement about, even in an organization like the UN, where it's hard to get
Fucking
countries to disagree
crazy.
about, to agree about much of anything.
That would be an understatement. And I guess that leads me to my next question, Alondra, which
It's
is
gonna
really,
make me
how do you do
bankrupt.
this, particularly given that AI or the race in this AI space is at full speed right now. And you guys, not just you at the UN, but all these individual nations here in the US, we're still debating what type of policy is necessary. How do you catch up?
Well, we do have to catch up, and I think it's, the challenge of the multilateral setting like the UN is that we need a new kind of multilateralism. So if we think about prior times when we were trying to solve global problems, we turned to states, and an issue like AI has industry and company stakeholders sitting right in the middle of this. And so I think part of what the report offers is two things that are important. a kind of sense of urgency. This committee spun up very quickly. We finished our work in less than a year's time, which in bureaucracy terms is like, lightning speed. And moreover, it's a process that was deliberately multi-sector. So business at the table, civil society at the table, government at the table. And so I think there's an understanding that we need new tools and new ways and networks of thinking about how to do this. That said, in the middle of all of this, various countries are trying to figure out how to do it. Here in the United States, we still don't have strong regulation around data privacy. We're still trying to figure out, as Chair Gensler was just saying, what are the laws that we need? We know that things that are illegal in other contexts, linguistic discrimination, finance, work, scams and find the finance space, disinformation, misinformation, all of those things are problems, but they're put on steroids in the AI space, and we're trying to still figure out how to do that.
Okay.
So I think, I would just add, really, one of the things we can do is use the laws that we have, and I think Chair Gensler has been doing that. What can you do already? And then also think about new ways of pivoting to offer new laws around. We got things around copyright, and the like.
But those laws also, and I mean that's important, but those are going to apply to a certain extent to individuals, corporations, the private sector, if you will. As you know, there's a huge national security component to this. You've had the ear of the president. And is there any sense here that when we talk about trying to get all these nations to coordinate, nations that are often adversarial with each other, how do you even create an environment of trust to say, okay, we're not going to do this, and then we're just going to go away and trust that X nation isn't going to do that?
Right. I mean, it's a challenge, particularly in the national policy space. I mean, AI is the biggest geopolitical sort of tool and opportunity and also challenge that we're going to face in our lifetimes. And so I think as always in geopolitics, you're trying to find this kind of fine line of cooperation and competition. Clearly the competition between the US and China here is pronounced. But, I mentioned to you that earlier UN General Assembly resolution led by the United States, China signed on to that. And so I think we want to have, high walls, high garden walls when you need them, and open windows as you can to find that sort of fine line.
But to Romain's point, Alondra, how do we even know what, for example, China has? I mean, obviously the US wants this, and every country will say they want this, but are they going to open up their books?
Well, we can't even get the companies to open up their books, obviously. So a closed, nation is not going to open their books. So it remains a big challenge. I mean, part of what the UN report is trying to do is offer, I think, very modest on-ramps to do some of that. So there's a proposal for something like the IPCC that we have for climate change around AI, where we begin to at least create So, I think we do this in other industries. We do it in pharma, we do it in finance, where people are able to share information that's not revealing their IP. So how do we get to a space where we have a shared ground truth around what the AI tools are and what they do? That's not, revelatory of, state secrets or IP.
Is this
but obvious, yeah, sure.
an area where companies perhaps are more powerful than governments in some ways? Because if, let's say OpenAI or Microsoft or whoever else doesn't like what the US is proposing, it can just go and operate somewhere else with somebody else's backing.
That's such a great point. I mean, that was a little bit like the point I was making at the top around the new multilateralism. I mean, part of what's multilateral here are multinational corporations that operate in all of these spaces simultaneously. I do think it's true. We've seen with something called the Brussels effect that, companies are making choices about how they want to respond to different regulatory contexts. And sometimes it's, easier just to respond to the hard one in all of your products. And that sort of trickles down to markets across the world. So we'll see what happens with AI and how strong the Brussels effect will be, given the European Union's AI Act that was finally passed after a lot of process earlier this year. And the United States doesn't yet have a lot of robust policy or law around AI, and so companies that are multilateral, multinational are left with dealing with EU policy right now.
Are really just one of the brightest minds in science right now. We're talking about AI as if it's something new. I mean, as I'm sure you know, this goes back decades, really, at least to the 1950s and even prior to that. Is there a sense that what we're talking about now and the potential transformative effect on our economy, on national security, and all these things we're talking about, is that real? Do you see that as real?
It is real. I mean, this is a powerful technology. It's already shown its power, and some of the, the concerns that Chair Gensler, for example, has around markets. We're already seeing some of its power and shaping misinformation and disinformation, which has all sorts of implications for broader society. So we can think about, kind of the election misinformation and disinformation we're experiencing right now. So, one way of answering your question, Romain, is that part of what we know for sure that it does, beyond a lot of the speculation, is that it really amplifies both the velocity and the scale of a lot of the challenges that we already face, including things like misinformation and disinformation. So, if Skynet, for example, never comes to pass, we still have a lot of problems and hopefully a lot of potential opportunities with the AI that we have today.
All right, Alondra, this was a real treat. We'd love to talk to you again when you have the time. One of the brightest minds in science there, Alondra Nelson, who is now a member of the United Nations Advisory Body on AI. All right, there's been a lot going on here in the after-hour trade, Bonnie, including that somewhat surprising news on Nike, a new CEO being appointed, Elliott Hill, and now we're learning that one of their previous CEOs, Mark Parker, is actually, who is also the executive chairman, we should say, writing a note to a staff today that we have now obtained, where he's basically saying that Nike will return its focus to athletes. This according to the former CEO, Mark Parker, saying that the new CEO, Elliott Hill, will be taking over for Donahoe in October, saying that we are all aware of the challenges that Nike has faced and that there will be a return to focus on athletics.
And I think to some extent this is expected. I mean, Donahoe had been at the helm for 5 years. As you said, he did some fantastic things at Nike, right? Just recently, investors hadn't really been rewarding the company for just not being innovative enough, maybe not changing constantly enough. We all know fashion changes constantly, and you have the likes of On and Hoka making a big entry into the...
Yeah, well, that's the thing. It wasn't just fashion, right? I mean, you talk about athletics. I mean, how many people do you know who are runners, and you ask them what they wear? They're not Nikes anymore. It's Hoka,
Yeah.
it's On, the On Cloud, and these other ones that just kind of came out of nowhere. And there are a lot of people that are saying that wasn't because those brands were so great. It's because, at least in the perception, was that Nike just wasn't as good.
Exactly. And after that, Nike up 10%, so investors looking forward to seeing what Elliott's going to do.
Yeah, it'll be interesting to see. Of course, he hits the ground running next month, and we should point out he was a former executive there and left when Donahoe came in, so he knows the company well.
We've
It'll be
seen this
interesting to
quite
see.
a lot recently,
Yeah.
particularly with executives coming back to companies to take the helm again.
Yeah, absolutely there. We've got a lot to talk about over the next 24 hours and some other potential market moving events as well up ahead. We're going to break that down for you when we come back after the break. This is The Close on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about things that are outside your control? How does the current fighting completely stop? I'm Francie Blackwan, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
The top names at Jackson Hole are on Bloomberg.
Inflation's kept coming down, so in the real rate sense, we've been tightening. I think that this reflects the reality of the economy. But we've got to keep our eye on the employment side of the mandate now. This is what the path down to 2% inflation looks like.
Nobody covers Jackson Hole like Bloomberg. Context changes everything. It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays at 9 a.m. Hong Kong time, right here on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
What could you do if your data was working for you and not against you? With Bloomberg delivering enterprise data directly to your systems, you get easy access to the details you want, optimized for higher level analysis, and financial data experts committed to helping you maximize your every move. Our data is made for more, so you can show the world what you're made of. Visit Bloomberg.com/enterprise data to learn more.
All right, to push ahead to some of the potential market moving events over the next 24 hours, and we start out in Japan, a big decision by their central bank.
Will they hike again? No economist in our survey says they will, but there are a couple of lone voices out there saying that we will get another hike. It has the potential to roil markets, but after the Fed, it's unlikely that we'll see
Yeah, maybe that 50 basis point cut here gave Japan bank a little bit more breathing room. Meanwhile, back here in the U.S., get this. Early voting starts for the U.S. election, which is still 47 days away, but Minnesota, South Dakota, and Virginia start voting.
Only 47 days away, though. It's crazy. And then we also have triple witching tomorrow. That's going to be a huge one. And Mike and Jackson volatility